Welcome to The Explainer. Today, we're getting our hands on a seriously fascinating document, the audited financial statements for Hindustan Copper Limited for the fiscal year ending March 31, 2026. This isn't just some dry list of numbers. It's a story of incredible financial momentum shadowed by some rather surprising corporate governance mysteries. Okay, let's dive into this.
All right, I want to hook you right out of the gate with this absolutely staggering figure, 920.67 crore rupees. That is the standalone net profit for the period from continuing operations that Hindustan Copper Limited reported for FY26. For a company operating in the heavy industry of mining and copper processing, a bottom-line figure like this represents a sheer scale of financial success that absolutely demands our attention. But how exactly did they get here? And is the foundation actually as rock solid as this number suggests?
Here's our roadmap for today's explainer. Section 1, the FY26 financial boom. Section 2, assets and cash flow. Section 3, translating the auditor's opinion. Section 4, the fine print warnings. Section 5, missing corporate directors. And finally, Section 6, summary of key takeaways.
All right, Section 1, the FY26 financial boom, where we look at how they're doubling the bottom line. Now, what's really interesting about this slide is the sheer visual leap between the two fiscal years here. Look at the revenue from operations. It jumped from roughly 2,070 crores in FY25 to over 3,077 crores in FY26. But the real star of the show, that profit bar, it's surging from about 468 crores all the way up to 920.67 crores. I mean, that is a near 100% growth in total profit. It's exactly the kind of chart any executive would absolutely love to present to their shareholders, right? And we can see exactly how this translates into actual shareholder value. If you look closely at the earnings per share, or EPS, which, essentially tells us how much profit is allocated to each outstanding share of common stock, it jumped from 4.85 the previous year to 9.52 in FY26. This just totally solidifies the narrative. By every headline metric out there, FY26 was a spectacular, highly lucrative year for the company.
Moving on to Section 2, assets and cash flow. We are following the money.
Now, profits on paper are great, but does the actual cash flowing through the business match those margins? Well, the answer is a resounding yes. 1725.70 crore rupees. That is the cash generated from operations. And what makes this number so incredibly impressive is the context. Back in FY25, this figure was just 699.23 crores. So not only did profits double, but the actual cash the business generated from its day-to-day operations more than doubled. They're converting their sales into actual tangible cash exceptionally well.
And as you'd expect, this massive influx of cash and profit has bolstered their balance sheet significantly. Looking at their standalone assets, the company's total swelled from roughly 3,504 crores to an impressive 4,421 crores in FY26. So, from a purely financial standpoint, the engine is absolutely roaring.
Section 3. Translating the auditor's opinion.
What does it actually mean?
Okay, so when a company reports numbers this good, independent auditors are brought in to verify them, right? In this case, PA and Associates stepped in, and the auditors gave Hindustan Copper Limited an unmodified opinion. But what does that actually mean? In plain English, an unmodified opinion is essentially a clean bill of health regarding the math. It's the auditor's conclusion that the financial statements are presented fairly and appropriately, following recognized Indian accounting standards. Basically, the auditors agree that the massive numbers we just looked at give a true and fair view of the company's financial position.
Here's the actual sign-off document confirming this unmodified status. It's a huge box checked for investors. So the crucial point is, the auditors aren't disputing the massive profits. However, we have to remember that an unmodified opinion doesn't mean the company is completely free of risk or that its operations are flawless. It just means the financial reporting of those operations is accurate. To find the real risks, we got to keep reading.
Which brings us to Section 4, the fine print warnings, or what I like to call the auditor's yellow flags.
Now it's time to really peel back the layers of this financial success. If we look at page 3 of the auditor's report, we hit this incredibly dense wall of text. When auditors use the phrase, "we draw attention to the following matters," they're basically tapping the reader on the shoulder and saying, hey, the numbers are right, but you really need to be aware of the context surrounding them. So let's translate this legalese into some digestible takeaways.
All right, here's exactly what they flagged.
First, some revenue is recognized on a provisional basis because they're still waiting for actual assay reports, meaning the final value of the minerals they sold could slightly change down the line. Second, the leasehold land deeds for the Gujarat copper project haven't actually been executed in favor of the company yet. And then there's a serious legal overhang. The company is fighting a vendor arbitration order in the Jabalpur Commercial Court, a terminal tax demand that's pending all the way up in the Supreme Court, and a demand from the Water Resources Department that's currently being challenged in the Jharkhand High Court. Now, these aren't necessarily deal breakers, but they do represent millions in potential liabilities just kind of hovering in the background.
Section 5. Missing corporate directors. This is the big governance reveal.
This brings us to what is easily the most dramatic revelation in the entire document. Deep in the Other Matters section of the audit, the auditors state point blank, the company does not have independent directors as required by the provisions of the Companies Act. The company does not have woman director. And this brilliantly illustrates a massive, massive gap between financial performance and corporate compliance. Operating without these required directors, that is a direct violation of the Companies Act of 2013.
Let's look at the actual source text here, because it shows the crazy domino effect of this failure. Because they lack independent directors, they literally couldn't legally form a valid audit committee. And the audit committee is supposed to be the independent watchdog that reviews these financial statements before the full board ever sees them. Since that committee was invalid, no valid audit committee meeting could even be held. As a result, the board of directors had to just approve these very financials directly, completely bypassing an absolutely crucial step of corporate oversight.
So we're left with this completely fascinating split screen. On the left side, a financial boom, nearly doubled profits, hitting 920.67 crores and a massive surge in operating cash flow. But on the right side, a governance bust, stark non-compliance with the Companies Act, operating without required independent or woman directors, and a totally bypassed audit committee. It just goes to show how a company can be incredibly successful operationally while simultaneously really struggling with internal governance and legal compliance.
Let's move to Section 6, Summary of Key Takeaways, and see how this builds.
Let's bring all these threads together now. Here are your main takeaways from the FY26 financial statements. Unquestionably, Hindustan Copper Limited had a phenomenal year. Profits and earnings per share nearly doubled, and that huge cash flow surge proves this isn't just some clever accounting trick. It's real money entering the business. However, and this is a big however, any informed observer has to note the legal overhang of multiple pending litigations and tax demands, and most importantly, the severe compliance failures regarding their board of directors and audit committee. Which leaves us with a final, really provocative thought to ponder today. Do massive profits outweigh compliance red flags? In the short term, the market often rewards the kind of numbers we saw at the beginning of this explainer. But in the long run, governance and compliance are the bedrock that protect those profits. So the next time you look at a headline boasting record earnings, remember to read the auditor's emphasis of matters, because the full story, it's always hiding in the fine print. Thanks for joining me for this explainer, and keep learning.